Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of November 7th, 2017. And you all know what is coming up. On the morning of November 9th, one of these two candidates is going to be president, barring a tie, standoff, recount like we saw in 2000. In all likelihood, one of these people is going to be our new president. And that's going to cause volatility in the market. I'm convinced that regardless of which candidate wins, we're going to have volatility. Which way is it going to go? Hard to tell. More likelihood down, but we could get a pop up too, depending on how things go. So let's take a look at a couple articles that are fun, and then let's go look at the charts and look at the reality of what's going on and talk about some strategies for trading this expected volatility as the election results come in. So here's the article from the Wall Street Journal, and the headline is, the S&P 500 falls for the 9th straight session, longest losing streak since 1980. That sounds really bad, doesn't it? And it's a true statement, but the context is interesting. So the market has gone down, but we're going to look at the charts. It's nowhere near a record drop in terms of price. 9 straight days in a row down is remarkable, but fear sells articles, and headlines that are dramatic like this certainly get attention. But we'll look at the charts in just a minute. Here's a nice headline from CNBC. It says, if you like market volatility, you're going to love the next president. And I think that's a true statement. I absolutely agree with that. I said that in my opening comments. I think regardless of who gets elected, it's going to inject some uncertainty into the market. And particularly if the election's really close and it goes to a recount and all that stuff, we should expect some volatility. So this is a special time, and we got to trade. We shouldn't not trade, but we should trade very carefully and with deliberation around expected volatility. I'll just show one more thing here. This is from CNN Money. This is their Fear and Greed Index, and it's showing extreme fear, and it's been increasing pretty dramatically over the last few weeks. So an indicator like this, I don't trade based on this. It's interesting though. It's nice background information. And again, let's go to the reality of the charts and see what's actually going on in the market. The reality of price and volume, because those are the only real things in the market, price and volume. Everything else is speculation. But the story of price does tell us something. So here's the S&P 500 on a daily chart. Every price bar is a day. And you can see here's this 9-day price drop that the Wall Street Journal was talking about. And again, it's true that it went down 9 straight days in a row. But even if we think back earlier this year, look at the move post-Brexit. So there was a couple of interruptions in that. But look how much more dramatic the price drop was. And this wasn't even the biggest of all time. So yeah, several price bars in a row. I think what's more interesting than how many price bars in a row went down is the pattern that we have forming here. And I've been talking about this for a few weeks. So I've shown this several times, but maybe not everybody's seen it. So there is Dow theory tells us that when we get lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, we've got a downtrend going on, and we just pierced some pretty important support areas. We went through price points, lows that had been previously established, and we're clearly down through the Ichimoku cloud. We've got momentum growing in our oscillator, and our trend indicator here, the precision trend filter, just turned red, calling for more lows. So this is pretty clear sign, just from a technical analysis, of a market that's heading down more. And just to review, where could it go to? Let's take a look real quick at the weekly charts. So here's the S&P 500 on a weekly chart, and you can see here this move is starting. And this is where we expect it to retrace to, down between these two blue lines. So it really looks like this is getting started. Now, the election could be the thing that triggers this and it really does get going, or we could have a small pop up. As long as we stay below the previous highs, I'm convinced that this is going to happen probably in 2017, be heading down. May not hit the targets in 2017, but we'll have a down year through 2017, down to S&P values between 1674 and about 1350. So pretty substantial drop coming, and the market goes down a lot faster than it goes up. It took 7.5 years to get up to these levels. So as it drops pretty quickly, there are some great trading opportunities, and I'll be trading those, and I will be publishing those to my Stock Pick subscribers. And speaking of my Stock Pick subscription service, I just published to my subscribers a very special trade that we're taking. We took it Friday. That trade is still available to take Monday, but you got to take the trade Monday before the results start coming in on Tuesday. And it's a trade designed to profit with volatility either way, up or down. And we just published that. Pretty excited about it. There's still time to get in. If you're interested in that, you can sign up for a subscription to my Stock Pick service, and you can see that trade immediately and participate in it. There's a little eye in the upper right hand corner. You click on that, it'll have a little place for you to click and to go find out more about that. It's a $7 trial for 10 days, and it's a money back guarantee. So you can try it, you can see the trade, check it out, see if it's for you, check out the service. If you don't like it, I'll just give you a full refund. So let's go take a look at gold and oil as we always do. There's some interesting things going on here. I had been saying I expected gold to be heading down and drifting sideways. It's pulled up a little bit sharply here, and it's going right into the Ichimoku cloud. So depending on how the election goes and how volatile the market reaction is, it could reverse off of here and head back down again. If it breaks up through this cloud and the broad market, the indexes, the S&P 500, the Dow, are heading down sharply, then we could be starting the next leg up in gold. And we'll be talking about that and trading that as it happens. So we're not there yet, but we've got to watch this pretty close. Here's oil on a daily chart, and oil has been pretty surprising. So what we're watching here closely, this has had 9 straight days or something like that down. Pretty surprising pull down, and a surprising increase in stored oil. So supply demand. There's way more oil in the supply side in storage than there is demand for right now, and that's driving price down. And no clear sign that the oil producers are going to work together to draw down supply and get prices up. So we did have an uptrend going here. We took out a minor low here. We got a major low support area. Let's see if it reverses. If it reverses and heads back up from here, then we may still have this move up in oil. But if we break down through this, then we got something else going on, and I'll continue to provide updates on it. So that's it for this week. Thanks for tuning in. It'll be fun to watch the election results come in. It will be anything but boring. And again, we're taking a very special trade to capitalize on the volatility regardless of which way the market goes, and you're invited to participate with us. As always, send your questions, your comments, your feedback. I answer every question or comment that I get. Have a great weekend, and we will catch you on the next update. Thanks.